With the removal of CPF SA after 55, this is a huge blow to many Singaporeans because now we have lost access to the risk-free 4% interest. To put this into perspective, let's say after setting aside the full retirement sum, you have $600,000 in CPF SA after 55 years old, which by the way, is very possible even if you are just earning the median income, have been diligently topping up $8,000 into CPF SA every year, and have been transferring OA into SA. With this 600k, you will have gotten a super fat $24,000 interest from SA every year. But instead, now you will only be getting a much lower $15,000 interest from CPF OA after 55. And there is a big reduction in interest. Then how Cannot retire liao lor? So in this video, I'll be sharing some of the ways as to how and where you can invest your CPF OA money so that you'll be able to earn more than just that tiny 2.5% interest. Also, do join my 7,000 members Telegram chat group to discuss or ask any questions that you may have. Alright, before we talk about what you can invest your CPF OA money in, the first thing you need to know when it comes to investing your money is that you will always have to choose between whether you want a lower risk, lower return, or higher risk, higher return. For example, while you won't really lose money by holding cash or investing in fixed deposits, you also won't get high returns from them. On the other hand, if you choose to invest in riskier assets such as properties and shares, while there's a higher risk of losing money, you will also be able to potentially get higher returns. Here's a graph that shows the huge difference between investing in stocks versus investing in something that's as safe as bonds or money market funds over the long term. So if you want to get a much higher return than just that 2.5% OA interest, you will need to be comfortable with taking risks, yeah? And with that being said, let's start with the lowest risk investments first, aka bonds and fixed deposits. Here, we have several options, starting with parking your money in CPF SA to earn anywhere between 4 to 5% interest, government bonds such as SSB, Singapore T-bills, SGS, guaranteed portfolios by Syfe and Stash Away, as well as bank deposits and money market funds. As to which you should go for, the criteria for choosing this is very straightforward, and that is when do you need to use the money. For example, if you're not planning to use the money till 55 years old, you can top up that money into CPF SA to earn up to 5% interest. Though, of course, as what we have learned from the latest episode, nothing is guaranteed and things can change anytime. So to reduce the policy risk of CPF, I would at most top up $8,000 cash into my CPF SA every year, and if I have enough money in my CPF OA, after setting aside some money for my housing needs, I will also transfer my money from CPF OA into SA to earn the additional interest till 55 years old. Then, let's say I don't need the money for the next 10 years, but I need the flexibility to withdraw anytime I want to. In that case, I can go for the Singapore Savings Bond. Otherwise, SGS would be a good choice if you don't need the money within the next 2 to 50 years. Or maybe if I don't need the money right now, but I need it within 1 year, in that case, Singapore T-bills or the guaranteed portfolios by ROBOADVISORS would be a good choice. And finally, if I need access to the money anytime, I can park it into money market funds as it doesn't have any lock-in period. So these are some options for fixed income. While they have the lowest risk, they also won't give you a higher return. Quick pause. If you are someone who's always too busy to invest, or sometimes forgets to invest, or just wants to stop timing the market altogether, you'll find Weeboo's regular savings plan to be helpful in letting you automate your investments. To enable regular savings plan, just open up the stock that you want to invest in, tap on the 3 dots on the bottom right, then tap on regular savings plan. And you can start investing with as little as 5 USD or 10 SGD. What's nice is that Weeboo lets you deduct the funds directly from your bank account, thereby saving you the hassle of manually transferring the money over. After that, you will have the option of automatically investing every day all the way to every month. Also, if you sign up using my link down below, fund $2,000 into the account and keep the money there till 31st March 2024, you will get to win 100 SGD worth of Tesla shares. But if you are able to fund $100,000 and maintain the funds till 31st January 2025, you will get to earn $2,500 worth of Tesla shares. Weeboo also launched a new transfer promo, from which you could possibly get up to 3,000 SGD worth of free shares by fulfilling the requirements. So if you are interested in trying out Weeboo, do sign up to them using my link down below. With that being said, let's get back to the video. Moving on, we have Singapore dividend stocks and ETFs. Then you'll be like, "Aiyah, Singapore stocks don't go anywhere one. Why invest in it?" Here's why. 1. You will receive some steady PP dividends every year. Currently, good dividend stocks are giving a yield of between 3 to 6% per annum. And even though stock prices can go up and down, if you look at those good dividend stocks, they will typically raise dividends over time, which means the dividend yield that's based on your initial investment would go up the longer you invest. And 2, by investing in Singapore stocks, Singapore investors will get to avoid currency risk as well as all those pesky taxes, such as dividend withholding tax, capital gains tax, and estate tax. Here, I'm comparing the options between investing via cash or investing via CPF OA. For investing with cash, there are a ton of platforms for you to choose from, but I will just use Webull and IBKR for comparison. And for CPF OA, the cheapest platform to use would be Poems. For securities, the easiest method would be to go with STI ETFs, as it automatically ranks all the top stocks in Singapore. Or if you want to invest in REITs, you can check out Nikko M Straits Trading Asia ex-Japan REIT ETF, which not only has REITs from Singapore, but also from other Asian countries, excluding Japan. Otherwise, if you prefer to do stock picking, you can go for dividend stocks. Check out this video if you want to know how to easily look for dividend stocks. For investing cash between Webull and IBKR, Webull is the cheaper platform, as it charges a much lower commission of 0.05% with a minimum of $1.60. Oh, and here's a pro tip. Webull allows you to buy Singapore stocks in just 1 unit share instead of the usual 100 shares. So that's a lot more affordable, yeah? And for investing CPF OA money, besides the 0.08% trading commission charged by Poems, the CPF agent bank will also charge anywhere between $2 to $2.50 per 1,000 shares purchased. Then there will be a 1% dividend handling fee, $2.18 service charge per quarter by the agent bank. So if you add it up, for a 10k investment, you'll be paying a one-time fee of $10.18 and a recurring fee of $11.72 a year. That's a lot of fees, yeah? That's why if you are investing after 55, if you want to avoid all these fees, you may want to consider withdrawing the money from your CPF OA and invest as cash instead. Next, if you want even higher returns, you will have to go with US market liao. So here are the options for investing via cash and CPF OA. For investing cash with Webull, you can go with WOO, which has the lowest expense ratio of 0.03%. Though the downside is that since it's an US domicile ETF, there will be a rather high 30% dividend withholding tax. So if you want to save on fees, you can use Interactive Brokers to invest in CSPX, which has a much lower 15% dividend withholding tax. For one-time fees, IBKR has a very low trading fee of 35 cents. Plus, because CSPX has a lower dividend withholding tax, you will end up paying a much lower recurring fee of $29.50 a year for a $10,000 investment. As for investing via CPF OA, since there's no S&P 500 ETF under the list of CPF approved ETFs, the only way you can invest in the S&P 500 is through endowers. For this, the cheapest fund you can go with is the Amundi Prime USA Fund, which has a rather low 0.05% expense ratio. Plus, because it's not domiciled in the US, it will only have a 15% dividend withholding tax. Endowers charges an annual platform fee of 0.3%. So if you add up all the fees, you will end up incurring a $57.50 fee per year for a $10,000 investment. Next, while the S&P 500 had given some fantastic returns in the past, the problem with that is that we do not know how long these good returns will last. So if you want more diversification, a better way is to invest in the top companies around the world rather than just the US. And as shown in this chart, there were times where the MSCI World actually gave better returns than the S&P 500. Though of course, in exchange for this diversification, you'll be getting a slightly lower potential return as compared to just investing in the US market. So here are the ways for investing in the entire world via cash and CPF OA. For cash, if you are using Webull, you can go with WT. And if you are using IBKR, you can go with VWRA, which has a lower 15% dividend withholding tax. And again, VWRA via IBKR would win here, as you will incur a much lower one-time fee of 35 cents and a lower recurring fee of $44.50 a year for a $10,000 investment. As for investing via CPF OA, you can use endowers to invest in the Amundi Index MSCI World Fund. Though, take note that even though this fund says world, it only invests in developed markets, so you won't see countries like China and India in it. While for VT and VWRA, it has about 10% in emerging markets. So if you want to invest in emerging markets, you will have to look for other funds to invest in. Though I wouldn't bother too much given that emerging markets is just a tiny 10% of the fund. So those were some of the ways you can invest your CPF OA money to earn more than just a 2.5% interest. Anyway, that's all for this video. Hopefully you found this useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.